Welcome to Trading Lounge and the European indices, and starting with the FTSE today, and just on the daily chart here we're looking at, this is pretty much the same from most European markets, that we have this intermediate wave 3 in blue here in play, and we're looking down at intermediate wave 4, pulling back to the wave 4 of 1 lesser degree, which is the minor degree here. The point here though is that this wave wave 4 here of intermediate degree and this wave here of minor degree, this obviously the intermediate degree here is higher in the count, so technically this wave 4 here should be bigger than this wave 4 here, and it should be bigger than it by the 61.8% basically. So this correction that we're looking at here as this wave 4 here, then this one here should be 60% bigger than this one here. And we can see that this one here was in a triangle pattern here, and well, not a very good looking triangle, but it's the way that it counts in Elliott. So it's a very sort of complicated sort of structure really, so we just need to be a little bit mindful. This move down through here and then this ABC here and then down again here is a little bit like this one here. It's down, which is this first one here, then the ABC here, and then down again here for this one. So this length here should equal this length here, but it will just be the A wave at that point. So we are seeing in the first leg here, this one here being 60% bigger than this first leg here. So the main point here, I guess though, is that this is not going to be easy, this wave 4 here. It's going to be complex within here and also choppy as well, because it doesn't have a long range to go to really. I think the 38.2% retracement level is a little bit lower than this particular wave 4 here. Yeah, but anyway, let's just cut through into here on the hourly chart here. We've got a pretty clear wave count here, in that, so from the top here we're looking at as down as wave A and wave B. It could be wave 1 and wave 2, but I doubt it, but I've got to leave it there for the time being. And then we had this move down here as an impulse wave, and then we were looking at this as an A and a B and a C wave. Last time we spoke, we were looking for this to move up a little bit higher into this box here. It never made it into the 7.4 area here. The 50% is the lower end of the box and the 61.8% are the higher end of the box, and yeah, it hasn't made it. But the move down through here has moved down nicely as wave 1, and now we can expect off the 7,300, which is the top of minor group 1. So we should see a bounce off that. We should see this little bounce here pulling back 50 or 60%, which will be also in 3 waves as well. So look, this may come a little bit lower here, but I'll just put it straight on there as such, and just to give us a bit of an idea here. So we'll be looking at, this is the 50-60% retracement level here. So look, it might drop a little bit lower, and it may not all pull all the way back up into this space here, but basically what we're looking for is a 3-wave bounce here. So I can just delete that. So if we get an A and a B and a C wave, which should be a 5 wave, 3 waves and 5 waves. So the optimum place to short this is in the box here, but the safer place is under the wave B low here. So an A and a B and a C, and then shorting that there. In fact, this is and then also look to add to this too under the 7.3 here, but also on the retest as well. Like, see this how it's moved through here. The breakout's important, but the retest is more important. So it'll be the same here, a move down, back up, reference point here, and if that's breached, then add to that position. And you can also do that at the 80 and also at the 72 here as well. But this little setup here is very much like the S&P 500, so I'm just going to go to that as well, which is not such a bad way to look at this either. I'll just go to, so with the S&P 500, we're looking at, this is the wave 3 top here, and then 1 and 2 and 3 and 4 and 5 here. So then we were looking at this as an A wave and a B wave here and a C wave to here, but this may already this, I mean, so our safe trade is this taking this low wave B out here. That's what I'm trying to say. But also here as well, we could experience this. This has got 5 waves in it here as wave C here, which we can look at in a tick chart in a moment. But it could also be 5 waves, could be wave 1 and back for wave 2, then 3, 4, and 5 and coming up here and then folding down here as well. So that's why this would be the safe trade here, or 2630 is a retested resistance. So just going to the tick chart now. So that will be something that you'll be able to use for the FTSE as well. So in this case here we've got the A wave, the B wave, and the C wave in terms of 1 and 2 and 3 and 4 and 5 here. So that could be the top here. But what I was looking for is 5 waves down here, and I know that we've only got 1 and 2 and 3 here, so pulling into the 50-60% retracement level, it'd be nice if that does come down here and give me 5 waves. So just take it, I can't draw on this side of the tick chart, so coming across here, this 1 and 2 and 3 here, this would be 1 and 2 and 3 here. If we get this as 4 and 5 down here, so that means that it will come down here, bounce off here, then come back in an A and a B and a C here. And then shorting from this space would be the optimal place to short from, and in this place. So we're looking for short trades, but we want the market to tell us that it's on the way down, and the way that I'm presenting this is the safe side of this trade. The DAX is more complicated. So this is the DAX here. So there's things that we know here and things that we don't know here, unfortunately. That I know this is an impulse wave, so after a corrective wave here, we should get further downside here. We were looking at shorting this reference point low here, but that's not the case. The market's retested, but it hasn't failed the retest here, so that means that we need to basically do this again over here somewhere when it comes in. We can't short it above the level here because, yeah, we had 2 options here originally from this point here, either this one here and then down from here, or from this one here and moving up higher to here and then moving down from here. So we just may get that. I can see we've got 1, 2, 3, 4, 5 in here, and then this corrective move here. So we could be 1 and 2 here. We might just get a corrective wave to here and for wave E here and then move down, or we'll get something like this here and then failing here, looking for 5 waves here. And technically, really, we should be copying that. We should be trading long above that little high just in here, and the reason for that is because we've got this impulse wave here and 5 waves, and then we've got the retest here, so that's our reference point high, so we should be going long from there with the stop under here. But we know that, you know, the Elliott's telling us a bearish scenario, so I wouldn't go over trading, but technically that's a setup and a signal, and we should be on the long side of that. So but we are looking on the short side, so I'm just going to remove that here, but that's fine. Yeah, so this here can be counted in different ways, so I'm not going to say that I have a strong opinion about which one it is. It's just gotten a little bit more complicated. It certainly could be an A wave, an A and a B and a C here for the B wave, and then up here for the C wave up here, or it can be the whole B wave can be a triangle pattern where we have the A, the B, the C, the D, and the E wave here, and finish and moving down from that point. We are looking for short trades, but we want that 13,000 as a retested resistance, and we're getting half of the retest here, but it's not failing to give us that short trade to the downside each time here. So yeah, that's how that is. And unfortunately, the AEX is the same here as well. I've sort of shifted the A, Bs and Cs around a little bit. Not that it makes much difference. We know this is impulsive. We know that this is corrective. We're just not sure if it's going to be a triangle pattern for wave B. And I always like to go, when I'm talking in the video, to keep things as simple as possible in terms of corrective moves and so on. So an A and a B and a C here. And once again as well, we would have been looking for the reference point low here, the retest, and then shorting from this point here. That didn't take the case. And in fact, taking these highs out here and also being supported on group 1 here, so group 1 on top of the 540, 41, 42, 43, you can see that's tested on there and support. So technically we should be going long from this point here now. But we need to allow the US markets to play out. And as I mentioned before with all of this, is that we really were waiting for the US markets to basically, do its thing here and, start to get bearish here. But we had to wait, when we spoke earlier in this week, we were still coming down here. And we needed this to complete down here, and then we needed the ABC correction here. And that may be it right here. Just don't have a lot of confirmation. Another move down to the 2630, that would be confirmation for me. Then you could go and short the the Eurozone indices and stocks and so on at that point. But we're not quite there yet, but we're very close. So once this does start moving down through here, then all those other markets are going to drop, going to follow and move in pretty quickly from that point. But until that wave B gets taken out, technically, then because there's still another count to the upside here that sort of lingers on my mind, and that's basically having copying this here, putting wave 4 over here, and having it's a bit wild, but having this here as an A wave, a B wave, and a C wave to here, and then moving up from here. So that's also possible as well. But taking this low of the B wave out here, that confirms that we can get rid of this that point just in here. Right. Okay. Well, that's it. Okay. So yeah, look, a nice move through the 2630. You know that we're in bearish mode, and happy shorting. Alrighty. Cheers.